Well, with future interest rate moves unclear, where should real estate investors be putting their money to work? PricewaterhouseCoopers is out with its annual forecast. Mitch Roschelle, a partner at PricewaterhouseCoopers and a business development leader there, is here this morning. Good morning, Mitch.
Good morning, Cheryl.
All right, so we got a name. We got Jerome Powell from the Wall Street Journal. We think he's the pick of Mr. Trump. With the interest rate kind of environment up in the air, you're looking at the best cities. So give us some examples of where we should be putting our money to work.
So the drum roll, Seattle is the #1 city for real estate investment in 2018.
Really?
Yeah, last time it was #1 was back in 2009. But what's really an interesting fact is that since 2009, the average size of the city that's been in our top 10 has come down precipitously. And in fact, Salt Lake City, which is #2, is the first time we've had a city of less than 2 million people. Salt Lake City is #3, rather. First time we've had a city of less than 2 million people in the top 10. So the trend really is the small city versus the big city for real estate investment.
But you've got L.A. on here, San Jose, Boston, Dallas-Fort Worth was on there. So we're seeing still those kind of bigger places. But isn't that more of like a real estate price story?
Yeah, you nailed it, Cheryl. Very much so, a price story. San Francisco, which had been on the top 10 list forever, really investors are looking at it. And these are largely commercial real estate investors, home builders, other kinds of developers. They're looking at it and saying, you know what, we can't really get outsized returns here. There's a tremendous amount of risk. Let's look where perhaps other people aren't looking. So that's why they're looking at the Raleigh-Durhams of this world. And this is the first time we haven't had a Texas city, you as a Texan would maybe not like that, but it's the first time we haven't had a Texas city in the top 10 in a while. I mean, in the top #1 spot in a while.
Well, in the top #1 spot, yeah, because Dallas and Austin, I've seen this list before, have always made it. But again, it's because of the state and local income tax structure in the state of Texas that helps real estate. I do want to ask you about tax reform really quick, because Jerry Howard, the CEO of the National Home Builders Association, came out over the weekend. He says they're going to oppose tax reform in Washington. Republicans really wanted those guys on board. Let's look at they're going to get it, the builders. What are you hearing about kind of the industry's reaction to the proposals they're seeing in tax reform?
Yeah, they've been lobbying for quite some time. They don't like the two things. They don't like the state income tax deduction, which includes property taxes, which may be going away. And they don't like the fact that the standard deduction is going up and the mortgage deduction, which is not going away, is swept into it. They've been trying to negotiate some sort of credit, which may just be applicable if it does happen for lower income Americans. But they feel that the actual mortgage deduction being something that people can see on their tax returns and sort of feel the benefit of, that going away is going to disincentivize people to buy. So they're not loving this new tax package, even though the home mortgage deduction, as we've seen it, is not going away.
Well, but that deduction, we should just say really quick, I mean, it's the high-tax states, New York, New Jersey, Connecticut, California. They're the ones, those are the lawmakers that are really pushing to leave the mortgage interest deduction alone. I'm going to say that 5 times fast. They're the ones that are saying, like, you cannot touch this. It really penalizes people in these states.
Right, and in those high-priced states where homes are more expensive, which means the mortgage interest would be higher, they also have higher property taxes. So it's the combination of the two which really gives the deductibility, gives the home buyer the incentive to buy. The realtors, the home builders don't like it because they're worried that the volume is going to go.
All right, Mitch Roschelle, we're going to have more to talk about this with you very soon. Thanks for being here.
All right, Cheryl.